Yeah. See the moonlight flick when I'm cruising through dimension shifts, huh? Hey yo, crank the volume. We elevated frequencies tonight. Yo. Moonlight dripping off the dashboard glass, flash fast. I'm a phantom in the digital mass. Every vision in rotation like a final of Mars. Every bar of constellation, I'm aligning my scars. Meditation, mutate, service burning the matrix. Shadow on my shoulder, say patience ain't basic. He said lights a rumor till your pupils embrace it. Now I'm facing revelations in a beautiful basin. City full of sirens, innocent of salvation. Angel investors on heavenly probation. Love be the currency, hate be inflation. Soul be the stock in divine valuation. Vibration that is stream, got co-modulation. Frequency bleed through the speaker in rotation. Feeling every echo like a spirit simulation. Trying to find peace in the glitch of creation. Now I'm swimming through the static, cinematic in the attic. Automatic thought patterns, quantumatic, problematic. Every atom that I rap and it react like magic. Turn the mortal minds panic, the galactic graphic. I don't wanna lose my soul to survive. They told me chase the gold, I'm chasing time. Cause heaven in a place, it's a frequency climb. Pure state of mind, redefine the divine. Breathe, rewind, go. Latex from the universe, say wake up soldier. I reply with a verse that could bend a boulder. My aura been colder, coated in exposure. Holy water drip through the ice on my shoulder. Design of reflections, that facade collection. Every score a confession, I'm the prophet of regression. Streaming my perception through a data compression. Every session of resurrection, no discretion. I'm the algorithmic archangel, arc fatal. Shark cradle, rocking bars in a dark fable. Heart cable, sparking, chart unstable. Mark label, shockwave, large and fatal. I've been scrolling through the scripture like a hacker with a halo. By trade, faith flow, breaking in the payload. Pain beat it to the joy be payroll. Life's a Rubik's Cube loop with a halo. Now I'm flipping through dimensions like a DJ scratch. Every memory I imagine ice my patch. Got code in my veins, binary attach. Reboot my brain when the rhythm dispatch. Breaking the concrete, thunder in the speakers. Lion arch and break the chains of the reapers. Divide us with delusion, confuse the believers. But the pulse of the people still pound through the meters. Babylon fall when the bass line rumble. Drums talk truth that the false gods fumble. Heartbeat quake, systems crumble. Freedom's a flame in the world, just a jungle. I don't wanna lose my soul to survive. No. I just need that truth to stay alive. They don't make my shades go, but I'm breaking that bind. Cause heaven's in the reverb of a pure state of mind. If I fade, don't you dare mourn me. Rebirth adorn me. Sample my storm speech. Reform me and form free. Spirit is a waveform, transform normally. I'm the echo of eternity, conforming formally. We ain't broken, we binary reborn. Every dawn and distortion reborn. Blah.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where it's a beautiful Monday, October the 20th, I want to go with. Folks, AWS is down, so a specialty shout-out to Rumble Studio carrying the show today. I was attempting to stream this because I multi-stream on obviously both Rumble and on YouTube, attempting to go through Restream today, and literally at 8:58, the service went down. 8:58, 2 minutes ago, the service completely crapped out, which means we had some serious issues. But specialty shout out to Rumble Studio for carrying it. This is actually one of my first lives with them, attempting to multi-stream, and it looks like we are good. I think we're good. Can I get a thumbs up? I think I'm on the wrong stream over here. That doesn't seem right. Where do I even go now? Things are a little. Can I get a thumbs up, thumbs down? Can you hear me? Can you see me? Can you feel me? Content. Where are we? Well, this should be right. Live now. This sounds like it is right. Hang on. Let me just update a couple things. Let me update a couple of things and make sure we are good. We are good. Hang on. Now it's all paused. We're definitely good on the Rumble side, I believe, at least. We're going to see. But for some reason, I think I have up my old chat boxes from the other stream, which is why we have this like awkward in between right now, because I am seeing the old stream, which means I can't see the current live chat. I can't see connected. Where is this chat coming? Oh, wait. Is this it? Someone just said, Matt, did you get a fresh cut? Is that the current live one? The person who just said that, Matt, did you get a fresh cut on YouTube? Are you on the right stream seeing me talk live, or are you on the old stream that is dead because AWS is messed up and we are here? Yes. No, wait, there's no Rum there, but then Rum should be good because Rum's actually carrying this entire thing right now. Rum should be good. Max the Bear. Who else do we have in? Standing Red. You had another Rumble Live open. Yeah, that's because at first everything was connected to Restream. Then we had to recreate it, connect it all to Rumble Studio. So Rumble Studio is saving the show today. Rumble is live. Okay, so let me pop this chat. Sorry, I was on the wrong chats. I was on the old chats. And it looks like we now have the new and improved active chats. This is what happens when we're all relying on AWS and it goes down. My apologies for this, but at least we found somewhat of a solution. And obviously, shout out to Rumble for saving my butt today, carrying it all, getting this multi-stream situation to work. Sorry, we're a little delayed. We're a little bit behind the ball, but this is what's happening. Sometimes this stuff just... it gets the better. Yeah, all right. We're pinning that. I am pinning public to the top of chat. If you guys could do me a massive favor and check it out, sign up for it. I think you're going to like it. But specialty shout out for public for being the partner of today's show. And obviously specialty shout out for Rumble Studio for saving us today, because AWS is definitely causing some problems. Definitely causing some problems. What's cool about this, what I really like about it, can you guys see this? This is one of the first times I'm seeing it, is I like how it's putting both chats together. So that actually might allow an opportunity for me. Whoa. Hang on a second. Whoa, I have an idea here. I was going to say, I could finally get all chat right above me and just push you guys together and just keep reading that one. Whoa there, Scooter. All right, let's check this out. Hang on. New and improved. Look at that. I could probably move this right above my head here. How can I make it look somewhat decent? Wait, can you guys chat away? Fill up the chat box so I can get it properly to where it needs to go. Oh, I'm liking that. I'm really liking that, because now we could all kind of see and read all of chat together. I think this is the first time I've actually successfully gotten Rumble and YouTube chat all in one place. Whoa. I could see the chat. You could see the chat. We could put the chats together. This will most likely breed additional chat fights. The one thing I need to do, because what's going to happen is when I click on this, it's going to go behind. So what I need to do, hang on, I can fix this. We're playing a little bit of a window image. Hang on. I want to save it so it's always there for you guys, even if I accidentally step away. No, that's not. Screen capture, window capture, browser source. Window capture. I want to add a new source. Chrome, Streamlabs, Rumble Studio. Studio.rumble. Studio, new Chrome tag. Is this it? Can you guys see this? Done. Okay, sick. Okay. So I think I got a way in which it can... No. Shit. I just deleted it. I just had it, and then your boy fumbled the whole thing. We had it all figured out today. No, stop it. That's not what we want. Hang on. Pop out chat. All right. Chat is successfully popped out. So then how do I get that in there so it's always there? Window capture, add source. We're adding a new source. This is the window capture. Rumble. All right. Done. Oh, here. All right. I got it figured out. Here we go. We are cooking now. Nope. We are cooking now. All right, could you guys very briefly just spam something in chat to fill this up? Very briefly spam something. All right, we're rocking this. Okay, there we go. And then is it going to rotate properly? Let's see. Hang on. We're sizing it up. There we go. Oh, we are cooking now. So no matter what, even if I click on this, that's going to say, all right, we got it all figured out. So we could keep chat permanent right there, actually. You guys can see what's going on, and I can click around even if it's not on that screen, and we could still see it. Sick. All right, sometimes life hands you rotten apples when AWS goes down, and you have to do your best to turn it into a little bit of lemonade, and that's what we've done today. Here we are. All right, obviously, this is now only possible because of Rumble Studio, and obviously a specialty shout out to Public. If you haven't seen the disclosures and whatnot, understand that when you trade, there is risk. I implore you to read the disclosures, but understand that I've been with Public now for almost 2 years, and it's for a good reason. That reason is I believe, in my own humble opinion, it is the best place to be trading options. If you're an options trader, aspiring options trader, this is the only brokerage I know of that pays you a rebate every single time you trade an option. Doesn't matter if it's a call or a put, doesn't matter if you're buying or selling, and you could get even more of a rebate if you start trading things such as an iron condor because there's so many more legs involved. So highly recommend you check it out. Trade options, earn rebates, no commission fees, no per contract fees. Yes, they have stock trading. There's no payment for order flow. They have crypto trading. They have bond trading. They have high yield accounts. They have retirement accounts. They even now have an exposed API for all my systematic traders. This is a one-stop shop brokerage for whatever you could possibly need. Pinned to the top of chat in the description of the video. Is Public free? Yeah, it is a commission-free brokerage. It is the best brokerage in my humble opinion. Check it out. It is free for you to download. It is free for you to check out. To start out at a higher rebate tier, I highly recommend using the link pinned to the top of chat and in the description of the video, just because you're going to start out there is a tier system. So you'll start out at a higher tier by using that link. But yes, it is free to download, free to sign up, free to check out. And I think as soon as you spend some time on it, you're going to realize that you like it as much as I do. All right. Here's what's going on in the world today. White House Economic Advisor has it says shutdown could end this week. Well, that's definitely going to be pushing the market higher. Stock futures rise ahead of big earnings week. And even though that's some interesting info, obviously it's the Hassett news that I haven't even seen it yet. I assume the market's up. Yeah, S&P 500 is up, Nasdaq's up, SPY and Qs and the Russell VIX is coming down. Right now, at least in the short term, and who knows what the day is going to really have in store for us. But obviously over the weekend, we had some commentary from Trump saying, hey, don't worry about this whole China thing. And then we also had some commentary, obviously, early this morning from the NEC, the National Economic Council, right? Is that what Hassett works for? Basically saying, hey, maybe the shutdown stops, which is kind of interesting. So, of course, I want to get into all of that. But first, can we talk about this? Brazen heist at the Louvre Museum snatches priceless royal jewels. Thieves used a truck-mounted furniture elevator to reach the gallery housing the artifacts and then sped away on motorcycles. So the Louvre in France was robbed. And folks, we got some priceless jewelry was stolen. Apparently, they took this crown at one point, but they dropped it. As they fled, the criminals dropped a crown that was with more than 1,000 diamonds. Dude, imagine being the dude in the crew who dropped this. Imagine being that guy. Be like, hey, man, where's that fancy schmancy hat? And the guy's like, awkward. But why I guess the word is excited. Over the past 2 to 3 weeks, I've been speaking with my wife quite a bit of how there's just no real heists anymore. We have all these heist shows and movies and books, and as a culture, we are obsessed with heists. But over the past 2 to 3 weeks, especially walking around in New York, there's all these fancy schmancy buildings with clothes and jewelry and watches. And I was like, you just never really hear of heists. Like, it's only in, I guess, quote unquote, Hollywood. And then boom, I feel as if I just willed this into existence. Folks, like, I know you're going to call BS on me. I know you're going to call baloney on me, but I swear for the past couple weeks, I've been just talking. I was like, hey, wife. That's how I talk to her. I say, hey, wife. You would not believe what's going on. There's no heist. And then the other day I was going to the gym and all my TikToks were about this. So I sent her every single video. I deeply, deeply believe that I willed this into existence. And what's crazy about it is you can actually bet on it. Will the Louvre crown jewel thieves face charges this year? So I guess whether you were or weren't involved in this particular theft, you can make money off of it. There is now literally a betting market on the thieves facing charges. So I just want to let you guys know all about that. Some very, very crazy stories over the weekend. Bringing it back to the market, I do want to let you know this period of the year, just because we have to get a little bit nerdy with some of those stats, facts, and figures. This period of the year is a little bit more choppy, we'll say favoring the bulls. So I just wanted you guys to know that. Trump lists top demands on China before trade talks resume. Positive development over the weekend as it relates to the trade talks. I don't think we're going to have enough time to watch this one because of all of the AWS mess ups this morning. But anyway, what you need to know, leaning more bullish than it is bearish. It seems like we're making some decent headway with China. And then obviously, as we just saw some of the breaking news as of this morning, is the shutdown might be coming to a conclusion, which I guess technically was always a possibility, but obviously the market is reacting to it regardless. China stock bulls look for fresh support for faltering rally. So they just had some of their economic numbers come out as we were all sleeping throughout the night, and it was not good. Once again, we are seeing additional signs that the Chinese economy is quote unquote faltering. China's economy grows 4.8% in the third quarter as expected, but investment sees rare and alarming drop. China's gross domestic product expanded 4.8% in the third quarter from a year ago, a slowdown from 5.2% in the second quarter. And this has been the generic trend. The economy is slowing down. They have a real estate crisis. They have a shadow banking problem. They have general political discontent. The overall trend in the past couple of years has not been so bueno, which means coming into these discussions when President Trump and Xi Jinping most likely will be speaking in South Korea. Going into that, I get it. You can hear this, you could hear that, you could read this, you could read that, you could do whatever you want, but coming into it, Trump definitely has more of the cards. Doesn't have all of the cards, but definitely has more of the cards. Trump calls for Ukraine to be carved up with Russia after tense meeting with Zelensky. So on a global scale, there's a lot of things going on. Yes, you have our trade spat with China. You have the whole Russia-Ukraine thing. You have Israel and Hamas. And those are just from all the past really week or two. So on a global scale, remember, there's just a lot of moving parts. I definitely am not jealous of the person that has to follow this schedule day in and day out in the political arena because there is a lot. Trump appears to be seesawing in his support for Ukraine following his phone call with President Putin last Thursday. Media reports suggest that the meeting on Friday between Trump and Zelensky, descended into a shouting match. So seems like things are going the right way, at least from our perspective with China, but going the wrong way for Ukraine relative to Russia. Congress is running out of time to decide the fate of Obamacare. I went into a bit more detail in the update video yesterday. Shout out to everyone who watched that video. But anyway, yes, global scale, lots going on. Bring it home here, and we actually are shut down ourselves. According to Polymarket, and you can see right here, that breaking news from Hassett, see how much is just in real time? Check this out. That's wild. In 1 hour, starting at 9 a.m., there was an 83% chance that it would be 30 days or more for the shutdown, and we just actually plummeted down to 63 days. That all happened in the past hour, and check this out, even in call sheet. Coming into this morning, we were at 45 days, but on that news from Hassett, we have now plummeted to 30 days, as in they're looking at about a week and a half. So that one piece of news, we went from about 44 days. At one point, this plummeted all the way down to 26, as in the end of this week. So clear movements in the betting markets of how long this either will or will not last. So with that, that actually now has a measurable impact of what we have to pay attention to this week. So this week, as it's kind of been, I've always had to be putting these asterisks of like, okay, watch this, don't watch that. Maybe we're going to get this report. Maybe we're not going to get that report. Depending on the speed of this government shutdown, if they open back up, as in the Bureau of Labor Statistics, the BLS is back on. Someone switch the lights back on in the building, wherever the hell they are. We might be getting the non-farm payrolls and all that stuff. So another thing for you guys to consider this Friday, maybe we get initial jobless claims. The major thing I can tell you we are getting is the CPI. So the BLS, even though they're technically shut down, has confirmed that on Friday, October the 24th, we will be getting the CPI report. So I want to throw that out to everyone, just so you know. And also don't forget, we're in earnings season. Tomorrow, we're getting Coca-Cola, Lockheed Martin, after the market closes tomorrow, Netflix, Capital One. Wednesday, we're going to be hearing from IBM. We're going to be hearing from Tesla. We're going to be hearing from QuantumScape. Later on this week, American Headlines, Intel, Alaska Airlines, P&G at the end of the week. So we're in earnings season. It's kind of a bigger week, but next week is going to be the crazy one. Thoughts on SoFi? Right now, it's just chopping sideways. It's not breaking out, breaking down, but it is overall looking good. And this kind of brings me back to what the hell happened this morning. And once again, my apologies, but blame Jeff Bezos. Amazon Web Services outage takes down major websites, and apparently they're trying to fix it. They tried to fix it at 9 a.m. this morning, and it caused even more issues. And this is large scale, like a lot of problems. So I feel fortunate that I only had to deal with it in terms of restream for my multi-streaming services. But hey, this is why we always have redundancies. This is why we always have backups. Shout out to Rumble Studio for carrying the show today and actually allowing us to have this pretty cool chat feature where I'm putting all the chat together. I kind of like it. Maybe we just kind of get rocking with this more so permanently. Well, anyway, before the market opens, if you haven't already, sign up for the newsletter. It is 100% free. You never had to pay for it. You never will have to pay for it. I break down every single Sunday around 10 a.m. You're going to get a breakdown of what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events, and then the seasonality of each individual today. Today, specifically, Monday the 20th is a bit more neutral. Tuesday is a bit more bullish. Wednesday is a bit more bullish. Thursday is a bit more bullish. Friday is a bit more bearish. So midweek is clearly bullish. The start is questionable and the end is questionable. That's the individual seasonality for each day of this specific week. But week large, if you just look at the week as a whole, it is very slightly bullish if you look at the last 3 to 5 to 20 years worth of information. So check that out. It's all in the description of the video. My mom will drop it in chat, but what's pinned to the top of chat is public. Sign up for it if you haven't already. It is free to sign up. It is free to download. It is free to check out. And when you get onto it, you're going to realize why it is my main brokerage. As an options trader or an aspiring options trader, this is where you're going to want to be, because even if you're break even, you're actually going to be net profitable due to the rebates. I can name no other brokerage on this planet that gives you a rebate to trade options, because I think they are the only brokerage on the planet to actually do it. So if you're watching this show, there's a very good chance you're involved in active trading. So from that alone, you should check it out. But more if you're a passive investor. They also have long-term accounts. They have AI, ETF generation. They have a lot of cool stuff going on. And honestly, there's no risk for you just to see even what's going on with the platform. So check that out, pinned to the top of chat and in the description of the video. And on that particular note, dingity ding, 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 the world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun. All right, so as we're waiting for this to open, I do want to kind of show you the key levels of the day. Obviously, we have this transition zone. We have the high from Friday. That means there is a downside gap fill. If you are chasing this trade out of the gate, please be careful. There's a downside gap fill to 6678. And whenever I see those, sometimes I get tricked into it myself of chasing it. And then at some point of the day, there's the dip to that. And I always think, shucks, why didn't I just wait? So I just want to call that out. Today, we opened at 6690. The downside gap fill is to 6678. So even though this is looking strong, and that's a big win for the bulls to be back above 6,700, I, for one, am not going to be chasing it because of the downside gap fill. Is it some sort of definitive rule that we have to get the downside gap fill? No, but the odds of us getting that downside gap fill are so extraordinarily high that from a risk reward perspective, I really have no business making whoa, dude, I have so many alerts going off. I just realized you guys can't hear it, but all these alerts are like blowing out my eardrums. My apologies. Anyway, we are looking strong right now. The S&P 500 is up 40 points. It's up 0.6%. That is solid. But to chase this out of the gate, it's silly when we all know that the odds of us coming down to 6679, 6678 are very, very high. And it's one of those situations that, think about the two ways this can play out. Situation number one is, okay, we don't come down and it rips and all right, whatever. Like it sucks. You missed out on a trade. The other situation is you get into it, you're in, I don't know, 30 points above where you should be. It does dip. And then that whole time you have to like suffer through that heat. It's just not worth it from a risk reward perspective. It is mathematically massively different on your portfolio to skip a trade that you should have been in versus taking a trade you should not have been in. It sounds like they are just the opposite of each other, but mathematically what they do to your account is wildly different. Wildly different. So just keep that in mind. I am by no means guaranteeing this downside gap fill, but I would say with high statistical certainty, we're probably going to be hitting 6678, 6679 today. And even if we don't, as a swing position, if we don't hit it, well, you're going to want to wait because the odds of it, if we don't hit it today, the odds of us hitting it tomorrow are even higher. So once again, we're just playing the numbers here. We're not here saying this has to happen. We're not trying to make predictions. We're literally looking at the basic odds, the stats, facts, and figures, and we are going from there. So obviously, these are the key levels. Feel free to write them down, screenshot them, do whatever you want. I believe at least early this morning, there was a bit of a call credit spread. Yeah, 6745 and 6785 are the interesting positive gamma nodes of the day. Once again, 6745 and 6785. You might want to be paying attention to those. But it looks like we might be getting a little bit of a range breakout. My life would be way easier if we just already got that gap fill. VIX is starting to die. There is a VIX expiration this week. That makes things a little bit more complicated. Wow, VIX is just falling off a cliff right now. I was swinging some puts just in case things got crazy over the weekend. They were definitely just protective puts. Obviously, they're down right now. I just didn't know how things were going to go over the weekend, but more than happy to cut them if we continue to see this type of strength. Speaking of which, it looks like as if Apple is showing a clear amount of strength, currently up 2.4%. What is going on with Apple? It's having a really, really good day. AMD's having a decent day. Avago's having a decent day. Looks like SPY is running into the high that we saw 2 days ago. Minute one was a big old pump to the upside. 5 minute, 10 minute, 30 minute, 4 hours now bullish. 5 minute, 10 minute, 30 minute, 4 hour is now bullish. But let's see how things do or don't want to hold. Obviously, right now, it's very hard to dispute the fact that in terms of momentum and price action, the current situation on a shorter time frame is evidently bullish. Let's take a look at the options flow. Let's see what's going on here. Let's see what's going on. Oddly enough, even though the price is going up, we're getting a bit of a mixed signal from the options flow on the S&P 500. So please keep that in mind. And actually, we were as well on the Mag 7 up until about the first 4 minutes. Then the Mag 7 popped. So there is a clear difference. Minute one, all prices popped, but options didn't necessarily agree. So I just want to call out that disparity. Seems a little bit odd if you ask me. Oh, I also forgot. I should let you guys know I was good. I did not trade. Oh, wait. Why can't you guys see that? Oh, hang on. Can you guys see this little thing over here? Do I just need to hide this for a second? All right, sorry. I'm hiding chat for a second, but just so you can see, I did not trade. I didn't break any of my rules. All of my accounts are there. I have all the funded PA accounts. They're all up about 3K. I have a funded future network. One's up 180. That's the 10-minute Orbo trade strategy that we've been talking about, filming some extra content in the background. Another one where I'm doing that, but kind of better. I'm kind of using some of the Icarus logic for the Orbo breakout, and then I'm testing out a new strategy on some of these evals. So all those accounts are there. Just wanted to let you know that I was disciplined and did what I should be doing. And they're going to start trading at some point. The strategy is on. So right here, they're enabled, they're ready to go. So just want to show you guys that, hey, I'm staying disciplined, or I'm at least At least in the first 6 minutes of the day thus far, I've stayed disciplined. So let's see how this plays out. My life would be far, far easier if we just got this dip, got the gap fill, the dip to the bottom side, just because from there, then it would be much easier to argue to make a bullish position. I don't necessarily want to chase this to the upside when we have not retested this key level of 6,700. We just kind of popped right off of it. So we haven't retested it. And we definitely have not gotten the downside gap fill at 6678, 6679. So if this rips without me today, I'm going to be missing it. I do not have a ticket to this particular train if we just get ripping. So we'll have to see. Can you do a quick dive into RKLB options train? It would be very helpful and greatly appreciated. And thank you. What do you mean? I guess I'm not really fully understanding the question. Into the options train, what I guess I need more of more of a breakdown of what you need. Webull not loading is probably because it's hosted on AWS. Right now, AWS is screwing over a lot of people. A lot of people. Robinhood not working? Yeah, because it's on AWS. So why a lot of services aren't working right now is because they're hosted on Amazon Web Services. AWS is down. Did anything seem odd to you the Friday before last? Odd? No, the market just reacted to what Trump was saying about China. And because of the option setup, we were susceptible for a large drop. That's not odd. That's just understanding the math of the situation. A lot of brokers aren't working right now because of AWS. Options flow for RKLB. You just want the flow for it? Well, there's not going to be much because the market just opened, but RKLB is not like a top traded options contract, so I don't expect anything too noteworthy. That's the options flow thus far. But folks, right now, I mean, I'm not the one here to defend brokerages, but it's technically not them. It is AWS. From a tech perspective of what's going down right now, where all of these applications and websites are being hosted is AWS. AWS is down, which means it is specifically an Amazon issue. Unfortunately, it is causing a lot of other problems. If it's not scheduled, this will end up being... No, it wasn't scheduled. They've been having issues for a minute now. Like ever since yesterday, there's been... I mean... What was I was using whatever service yesterday and it was down, and then I looked into it and Down Detector was losing its mind, but it had issues. Like, it's been impacting people's flights and check-ins. Like, this is a legit bad issue. And that's actually why Rumble Studio is working right now, because they host it themselves. They don't rely on others. That's exactly why I'm able to stream at this exact moment, is because Rumble has its own cloud. So basically, all these other web services and blah, blah, blah are being hosted by Amazon. So that means you have like kind of a singularity risk. If Amazon goes down, you're going to have a lot of things go down, which is why Rumble literally has their own cloud. So someone's cloud's down, but shout out to Rumble for having cloud that is up. Solar flares, I actually don't know why it is down. AWS down. Does it say why? Huge. Oh, Amazon Web's. Okay, whatever. Amazon Web Services says issues mitigated as sites hit by global internet outage. Amazon says an issue which affected its cloud computing services unit, AWS, is now fully mitigated. The fuck it is, after being hit by an outage which disrupted several popular websites and apps across the world, including Snapchat, Facebook, and Fortnite. Yeah, I mean, it hit airline. Like, this is a big issue of what's going on. But to say that it's mitigated, I don't think they know what they're talking about, because we're literally experiencing issues right now. Amazon Web Services outage hits major websites. What we know so far, the recovery begins. AWS, which suffered a major outage early today, is the leading provider of cloud infrastructure technology, accounting for about a third of the market. The website Down Detector said the users reported indicated problems at sites such as Amazon, Snapchat, Disney Plus, Reddit, and Canva. By 3:30 a.m. PDT, the issue had been fully mitigated. AWS sent an update adding that most service operations were succeeding normally. Now, bullshit, dude. Bullshit. As of 9 a.m. this morning, we are clearly having issues. To say it's fully mitigated, that is a lie. That is a lie. That is a lie. That is a non-truth. They might think that it's fully mitigated, but the rest of us are living a very different reality. Of reading, hang on, what is this one? Go Rumble, go. Dude, I actually love the fact that I can read all of chat together in one place instead of like clicking around and having all of it. I'm loving this. Matt, could you talk about the high volume IBID calls at 95 was not there on Friday? That just means a lot of people open that position. I guess, like, what do you mean by that question, Chris? It just means that people are in that position. Remember, open interest can happen from buying calls or selling calls because you can sell to open or buy to open. So you'd have to look at the direction of it, which is going to be very important. And Spot Gamma can help break that down. But that just means more people relative to the last time you checked are playing that particular strike. There's more live contracts. Why use your own cloud when you can use AWS and blame someone else when things go to shit? Because you can still get sued yourself, I believe. I mean, historically, just because someone's cloud goes down doesn't mean you're like not going to get sued. Someone unplug it and plug it back in. Even Rumble creates Rumble like a red-headed stepchild. What do you mean? I'm loving Rumble right now. Rumble Studio is what's saving this situation for me. Rumble Studio is definitely that would be the opposite of the saying for a redheaded stepchild. This is the golden child right now, because while everyone else is down and panicking and doesn't know what the hell's going on, we're living life on easy street. We're living life on easy street. No Rumble races for over 3 weeks. Rumble locals. Yeah, because people started cheating and entering multiple times. So we just did it in a way to stop the cheating. You should take it up with the people who were cheating. That's kind of on them. I wish it weren't true, but we had various issues with people entering into the giveaway multiple times. So we had to fix it. And one way to fix it was to use a different service that basically only allowed one entry per person. Rumble Chat still owns Pet Rocks. Hey, you never know when they're coming back. How come Rumble users are excluded from marble races? What do you mean excluded? Kathy K, explain to me how Rumble users are excluded from marble races. Technically, you just have to have a Twitter account. That's not Rumble users are excluded. It's that all you literally have to do is log into Twitter. That's just factually inaccurate to say that Rumble users are excluded. Anyone is welcome. If you are an OnlyFans user, a Rumbles user, a Twitch user, a Kick user, a YouTube user, anyone can do it. Rumble isn't Twitter. Oh, I never realized that. Oh, guys, breaking news. Rumble isn't Twitter. Thank God Jefferson is here, because we would all be lost and confused. We would all be lost and confused. Folks, Rumble is not Twitter. Holy crap. What would we do without Jefferson? So you are allowing Rumble, Spot, and Marbles? Yeah, literally, theoretically, every Marbles racer could be from Rumble. They're all just picked from Twitter. What? You do seem confused when answering the question. Oh, no, it's because I'm making fun of you because you're stupid, because you don't understand what you're talking about. Jesus. Dude, there's some people. It's crazy that we're already starting this early in the week, that you just have some dumb fucking people. Some dumb people. Jefferson, make sure you take your pills this morning. Because Jesus Christ. Wow, dude, Jefferson, you make sure before you go into work today, buddy, make sure you take your pills, because your brain is fucking mashed potatoes right now. Someone said SoFi is rolling. Yes, it is. Up 5%. All right. Where are we at? We haven't hit this next open interest level of 6720, but what I find to be the most problematic right now is the fact that we have this downside gap fill, which makes it very, very difficult to have an intraday bullish swing position before we get this gap fill, just because the odds of us at some point today coming all the way down to 6679 is very high. Is it a guarantee? No, there's no such thing as a guarantee in trading, but it does make life a little bit more difficult. And by a little bit more difficult, I mean a lot more difficult. But with that being said, Icarus does not know about the gap fill, like at all. So Icarus is inherently just a trend following system. So if this keeps trending and we get to the right time of the day, which we're actually technically already at because we've already waited 15 minutes. So Icarus is on. If this keeps trending here, Icarus is going to let it rip for sure. So some of these down here, these bottom 5, 1, 2, 3, 4, 5, these 5 will probably start trading. These 5 will most likely start trading as long as I didn't break the code over the weekend, which there's also a non-negligible chance that I broke the code over the weekend because, I don't know. I think ChatGPT, I think AI or maybe LLMs in general are somehow degrading. I don't know how many of you have been using it. Netflix. We're getting some sort of breakout on Netflix, team. Netflix, lower highs and higher lows, so it's still stuck in consolidation. I guess it'd be more interesting if it breaks one of these extremes. But right now, technically a higher low. We're breaking this out, but that's also a lower high. So it's really just not trending, not really doing anything too special at the exact moment. I'm attempting to patiently wait and see S&P 500 retest 6,700. This is a key technical level, psychological level, open interest level. I would say it would be a statistical rarity for us to not retest that today. And in fact, I'm going to take that to the next level and say it would be a statistical rarity for us to not test 6679 today, which was the high from Friday. This is a downside gap fill for whatever reason, and we could get into the philosophy of why it happens. But the major thing you need to know is that these downside gap fills happen with high statistical likelihood. So whenever you see gaps above the previous high or gaps below the previous low, understand that that is a live active gap fill trade that many people in the market are attempting to take advantage of. Today, you could argue maybe it's going to be a little bit more wonky due to the fact that we have this AWS issue. A lot of you are reporting that you can't get onto your brokerages, you can't execute your trades. I have a feeling that the bigwigs, the fancy people, the market makers and all that, I have a feeling that they are probably using multiple cloud providers. I highly doubt that you have something like Citadel or 2 Sigma or Wolverine or Susquehanna exclusively relying their trade execution on one cloud provider. So I have a feeling that hang on. We're live. Icarus is doing something.
Target filled.
Icarus. All right, that one hit. That one hit. What about this one? Oh, Icarus is doing some stuff. Not my cup of tea. I'm not the biggest fan of this trade because of the downside gap fill. It looks like 4 of the 5 already locked in. 195, 72, 72, 72. And then we have this live one right here on the screen. It's risking the recent low, and it's going for an ATR measured move. ATR measured move. It took the breakout trade. The breakout trade happened to be the breakout of the intraday high. Not necessarily the biggest fan of that, but also the historic backtesting says it's actually fine to do that. It's just psychologically, I'm not the biggest fan, especially when there's the downside gap fill, and I just don't want to be that guy who somehow top ticked it. But hey, it is what it is. But as of now, 1, 2, 3, 4. Oh wait, you guys can't see it. let me hide this for a second. Right here. 1, 2, 3, 4 already locked in. 195, 72, 72, 72. The 195 that locked in, that was the quote unquote run of the mill 10-minute Orbo breakout, except I added in some directional filters. Then the one below it that's still live, currently down $315. That was my mixture of the 10-minute Orbo trade with my Icarus logic. And then these other ones are just a new strategy that I'm working on.
Order submitted.
Here we go. Wait. Oh, it's trading again? So these took a second trade already today. Interesting. Well, that almost locked in, which I was getting excited about for a second. Come on, Icarus. Let's lock it in. It's trying to lock in 35 and then 38.5. Just collecting some data, doing some out-of-sample testing. Dude, how crazy is that it hit my value and actually didn't give me my fill? Like right here. You guys have seen it, that my order's been there at 35 and the high was 35. It hit my level, but due to the amount of volume traded at that strike, or excuse me, at that price, I didn't get a fill, which is going to drive me crazy for sure. I cannot believe it. It actually hit my price. 25,235. That's exactly where my fill has been this entire time. W2F Robinhood. I'm not one to defend Robinhood, but this is technically not their problem. I mean, I guess in a certain way you could say, hey, Robinhood, why don't you have redundancies on someone else's cloud, such as Google, such as Microsoft? Like, that's a fair argument, but it's not down because of a technical problem from Robinhood. Or same thing with Webull, same thing with Public, same thing with Netflix and Fortnite and all this stuff. This is all what happens when a third of the entire internet is being hosted by Amazon Web Services, AWS. And when AWS goes down, a lot of things go down. A lot of things go down. So if you wanted to blame these services, like Restream or whatever, that was the thing I had issues with this morning. Your main argument would be like, why do you not have a redundancy fall over on a different cloud? That would be like the strong argument. I remember when I used to work way back when I was a baby, just out of college, one of the jobs that I had when working at a bank is it was actually a legal requirement for us to have fallovers on a different cloud, because when you're talking about banking services, people can't be without their money. So it was actually like a legal requirement that whatever we did, and I used to work at Capital One, all their apps and whatnot, if one cloud went down, you had to have another one, and there was a certain amount of time it had to happen in, that it had to be spun up in an entirely different one. So I think ours was on AWS, but then we used Microsoft's Azure as our like secondary fallover. And then I think there were even other ones, like there might have been some departments that even had a third one, like maybe along the lines of like just Google or some shit like that. It's Vlad's fault. Hey, I like to blame Vlad as much as the next guy, but this one probably not on him. But alas, that doesn't make it any less frustrating. Dude, did it hit it again? It did. Dude, I've been double tapped twice. Not even a tick off. I'm saying 2 separate times it has hit my value and I just have not gotten a fill. That is crazy. Has there been any person that has live streamed more bad luck than what I do? Like this, I'm actually hitting new record levels of just bad beats. It's literally hitting my price and not getting my fill. I mean, last week, we're like, oh, like it's a point away, like whatever, that sucks. It's so close, like it's coming close. We're now at the point where it's like, no, we're actually going to hit your value and just not give you like, dude. Hey, without bad luck, I wouldn't have luck at all, so I can't really complain too much.
Target filled.
There we go. All right, it's all locked in. 195, 365, 144, 144, 144. So these bottom three, Apex, these are going to keep trading throughout the day. These two are officially done on the day. FFN, the Funded Futures Network. This one that made 195, that was the 10-minute Orbo breakout with a directional filter. And then this one, the second one that made 365, similar idea, except I made it a bit more robust and it had some like trailing logic. As you saw, it had two different targets, and it's based on volatility, this, that, the other thing. But anyway, that one worked well today, at least locking in 365. And then obviously I still have 20 funded Apex accounts that I have not traded yet today because I was waiting for that downside gap fill, waiting to see what in the world happened there. But had a good day with them on Friday, locking in about 3K a pop. How are we looking? Overall, higher highs, higher lows. Maybe if we snap 181, that gets a little bit interesting, but calm, cool, collected. Is China ruining this session? Well, hey, I don't know. Maybe China's the one who took it out, but I can let you know that maybe it gets a little bit interesting there, a little bit interesting there. All right. So we had some trades done. Shout out. We're at this down sloping trend line. Apple's having a good day. SoFi's having a good day. What the fuck happened over there? Well, that's a bummer. We're right at this trend line. Here's a look at the flow. Mag 7 showing quite a bit of strength, especially starting at 950. That delta really pushing to the upside. People are not touching puts, and they are clearly buying calls for this Friday and some also longer dated calls. And then looking at the S&P 500, not much is going on, and this is exactly what we saw last week when we popped up early, had the downside gap fill. I mean, folks, I've been warning you about it. I told you, even though it's looking good, and I too wanted to chase that long, it is a dangerous game when you know you have the downside gap fill. Technically SPY does, okay. SPY has a downside gap fill to 66576, and the Qs have a downside gap fill to 60. Hang on. Crossing down. All right, SPY. I'm just editing this alert so we know if it actually does hit. So you can see it on SPY. It is the high from Friday. You can see it on QQQ. It is the high from Friday. Even the Russell technically has one. You have one right. Let me fix this. So it's just, as a day trader, as a scalp trader, as a person who you're trading intraday, you have to be mindful of taking counter trend trades. And when I say counter trend, I mean counter trend to the direction of the downside gap fill, just because there's such a high likelihood that we hit it at some point, and you don't want to get caught in that. Now, obviously, if we get the fill right away, that's a different story. Maybe you actually want to play off of that and use that as your support. But for me right now, it's just a game of patience. If I see a low risk opportunity to try to play the downside gap fill on the NQs on my Apex accounts, I will, but that would be a very specific situation. A very specific situation. We'll see. I'm watching it just in case I want it. Just in case. But here, I'm so stoked about this chat of having both up, just to be able to see what in the world is going on. All right, what was this recent low? You should be mindful of this. You should also be mindful of this. Here's a look at the Mag 7. It's after a big pump, it's going flat, not really giving anything up. But ever since 9:53, we are seeing a dip. Please be mindful of the old 10 a.m. reversal. That has been a trading phenomena that we have been watching over the past couple weeks now. And it seems not every day, but more often than not, we are seeing trend reversals at 10 a.m. So that might be another reasoning for yourself to just wait till 10. Oh, I'm waiting. Do I want to play this? Do we get the 10 a.m. reversal? Yes, no, maybe so. Yes, no, maybe so. We have some recent lows marked out on the chart. Let me get ready here just in case I want to fire one off. The fact that, okay, so remember, on a 50K account, at least with Apex, your buffer stops trailing at 2.5K. I was in the fortunate situation to lock in 3K on Friday, which means I no longer have an unrealized drawdown, which means I'm actually in the fortunate situation where I just don't have to worry about that anymore, which in my mind at least, and maybe you approach the market and your accounts a little bit differently, means that I can really kind of use the risk management that I actually want to use. And there's those certain times where you're like, well, no, I gotta like kind of let it run a little bit more just because I need it to hit, because it's being based off my unrealized drawdown, and you just get into that. And fortunately, it does stop the whole argument of the unrealized drawdown. As soon as you fill out the buffer, you just no longer have unrealized drawdown. So I am in that situation where pairing that together with the fact that there's no pattern day trading. Well, of course there isn't in the SIM defunded environment, but even if there wasn't SIM defunded, there's no pattern day trading in the world of futures trading, which allows me to be even more aggressive. So hopefully I can kind of keep my eyes on the prize today and actually trade the way I should be trading. But I'm watching for something to kind of break down. I'm watching for something to break down to maybe give us an indication of if we're going for the downside gap fill. If you're just tuning in right now and you're like, what in the world are you talking about? This is really bullish. Yeah, you're right. We are making higher highs. We are making higher lows. The trend is definitively to the upside on the 5 minute, 10 minute, 30 minute, 4 hour, 5 minute, 10 minute, 30 minute, 4 hour. Yes, I don't disagree with you. However, we have a downside gap fill all the way down to 6679. 6679, that is the high from Friday. We opened above it. We have not retested 6,700. We have not retested 6679. So we have a key level. No, like we rip through it in minute one. We have this downside gap fill, and I don't really feel comfortable on this particular time frame going long until we clean this up. I want to see a retest of 6,700. I want to see a retest of 6679. If this goes without me, okay, that's fine. It goes without me. That is completely fine. As I was saying a little bit ago, mathematically, the impact on your trading account is very, very, oh, hang on. 35. Am I okay with that risk? Am I okay? This particular trade is a little bit out of my wheelhouse, but I'm wondering, is this a legit lower high that I can play off of? I just saw a little bit of weakness in the cues. So technically we're in a bit of consolidation. We have higher lows and lower highs. So which way is it going to break? Here's our lower high. Here's our higher lows. Which way does it want to go? Obviously, I don't have an active trade on. Well, good thing I didn't arbitrarily chase it, because we are seeing another pump here. What's weird about it, though, is the S&P 500 options flow does not really agree. Even though the SPY is pumped and we pulled back and we're pumping again, what's sticking out in my mind, at least, is the people playing the derivatives market on the S&P 500 are not following suit. They are not in any manner following suit. So I'm just waiting. I'm waiting, ideally.
Order submitted.
Hello. All three fired again? Well, 4 fired again. Hang on, I'll show you what's going on. Sorry, I keep forgetting. I only thought these 3 should be trading. I'm confused as to which one is this. Why is this one trading? I completely understand the trade here. This one, this one, this one, this one. I get these 3. I thought this one was limited to 1 trade per day. Literally earlier, why I said, no, those are done for the day. Was it because of testing I was doing yesterday? I might have been doing testing on before 10 and then after 10, hence the secondary trade. Interesting. Well, let's see how it plays out. What's even more weird is that it only took 1 contract. So that one's not trading. This one is trading. And these are trading. The only thing I could think of was that I was testing before 10 a.m. and after 10 a.m. and I must have left some of that logic in, and hence now that we're past 10 a.m. it took another trade, which was very similar to the pre 10 a.m. trade we took. So hopefully we at least tag 50 so I could lock this in, but I'm still trying to be very mindful of the fact that I think we dip a bit here. I think we dip a bit. Time will tell. You F up the code? Technically a little. I mean, the code did what the code was supposed to do. I think it was more because of my testing over the weekend. I did a lot of testing. Dude, I don't think I left my computer chair all day yesterday. I was just ripping some code, and it kind of ended in one of those situations where I felt as if I was making very good progress. And then a lot of the AI analytics tool I was using just shit out, and I overran the memory, and it just became a debacle, to say the least.
Target filled.
It became a debacle, to say the least.
Target filled.
All right. I feel like I should turn this off just to make sure it doesn't keep going. All right. So now the only ones that are on are the ones that I do expect to trade multiple times today, right here. Monday. So right here, Apex are Monday. Those are up 215. The initial Orbo breakout, 195, that is officially done. And then this one traded twice today, even though I thought it was only going to trade once, but hey, it's up $520. So 246, 1,100. So up about 1.2, 1.3K today. Is roughly how much it is. I haven't traded on these ones yet just because I haven't seen a risk reward opportunity that I'm particularly fond of. And the reason I haven't, just to kind of further explain this and maybe add a little bit of context to our conversation, is the fact that it's just been bullish. I'm seeing higher highs. I'm seeing higher lows. Price structure is bullish. Looking at momentum, 5 minute, 10 minute, 30 minute, 4 hour, it's all bullish. Okay, cool. That tells you to be on the bullish side of things. However, we still have the downside gap fill. I don't like that because at some point today, I'm expecting that to be hit. So it's really hard for me to hop on this train to the upside when I know with high statistical likelihood, we're going to be dipping at some point. That's not a guarantee. There's no such thing as a guarantee. And there are days where you have to look at the gap and you're like, oh, that sucks that we're not going to get a fill. And you just miss out on the trades all day. That happens. There are going to be some days, you have to accept that as a trader, where just your criteria, your filters did not set up and you end up taking no trades. I know it's crappy. And I know we all want to be trading and ripping it, and you feel like you need to have some skin in the game, but sometimes it just doesn't work out that way, and it's just something that you have to accept. It's part of the game. It's not a fun part, but it's definitely an important part. All right, folks, as we are waiting to see if we get rejected or not, we are coming up to another level of resistance at 6,720. You could see that right here, 6,720. We had this negative gamma pushing us up. We have some positive gamma. Oh, this actually dropped. So earlier today, this was at 45, but it's now at 40. So I do want to update that. Earlier today, yeah. So we need to switch to this. This was at 45, but now we need to bring it down to 40. So obviously the market is dynamic. People are making trades, and the trades they've made today is actually lowering the ceiling. There was a ceiling at 45. It is now dropped to 40. There's some people playing 30, but really 20 to 30 is a bit of a positive gamma node, as you can see. So let's see. We are looking strong, higher highs, higher lows. Bullish. Every time frame has bullish momentum without a doubt. The one thing that is the thorn in the side right here is the fact that we have a downside gap fill. And I cannot overstate the importance of that enough. There have been many days, like literally it happened last week, where things are so incredibly strong and you're like, you know what? Screw the gap fill. I'm just going to play to the upside anyway. And then fast forward X amount of time, and before you know it, you're like, dude, why did I just not wait for the gap fill? You could have gotten a much better fill. You didn't have to pray for a comeback or anything like that. And when I consider the risk reward of it, I would rather miss out on a trade that is good rather than getting into a trade that is bad. So of course, that's my own thoughts on it. This was a decent trade here at 10. That was a nice breakout at 10.03. You're risking this recent low. You're playing it up to here. Not bad, but I'm a little bit, I guess, gun shy today knowing about the downside gap fill. Well, while we're waiting to see if 20 is broken or not, shout out to Public. We've been partnered up with them for almost 2 years now, and it's for good reason. In my humble opinion, this is the best place for you to be an options trader because it's the only brokerage that pays you a rebate every single time you trade an options contract. Doesn't matter if it's a call or put, doesn't matter if you're buying or selling. If you're watching this, if you've been here before, there's a good chance you've heard me pitch Public to you, and it's for good reason. They are one of my favorite partners because I truly love their product. And I think as soon as you check it out, you're going to like it as well because it's the only one giving you a rebate. If you're trading anyway, you might as well earn more money off your own trading. It is pinned to the top of chat. It is in the description of the video. Did you hear about the guy who lost $3 million in XRP, hacked out of his cold wallet? No, but those stories happen all the time. Unfortunately, people not really understanding the best way to manage their wallets. Those stories, unfortunately, are a dime a dozen, and I can only imagine, I can't imagine what it's like to lose $3 million. And that has to be so just insanely brutal to handle and withstand like that. It sounds like a nightmare. Sounds like an absolute nightmare. I keep accidentally... whenever I switch over to the trades, I accidentally hide chat. My apologies for that. I'm so stoked about this chat. I'm so stoked about it, that it's up. But I don't know. AWS is out. The Louvre was heisted. It's a Monday. No one knows what in the world's going on. What a crazy day. What a crazy day we have going on, folks. What a crazy, crazy day. Crazy, crazy, crazy. Are we ever finding a top? Are we? Yes, no, maybe so. Wow. Look at just how much this has ripped today. We really got going. SPY, some form of a breakout. Some form of a breakout, but we just right at market open ripped to the pre-market high and have not looked back. Just higher highs, higher lows, each one. Higher highs, higher lows, higher highs, higher lows. We just keep going and going and going. Golly, not slowing down. Look at that. A perfect walk to the upside. So all I'm doing is waiting to see if this trend changes. Clearly, these green carrots are your local highs, so our highs are getting higher, and the red carrots are your local lows, as in the lows are getting higher. So higher highs, higher lows by any reasonable trader, investor, market enthusiast opinion, that would be a bullish trend. Obviously, it's specific to the 1 minute because I'm on the 1 minute chart. But it is undeniable for market open to this exact moment, we are in a bull trend. Higher highs, higher lows. I don't care what anyone says because this is just basic stuff. Obviously, it could change, and that's why we have to pay attention to, okay, what's the recent low? What are the recent highs? But right now, it's just the highs are getting higher, the lows are getting higher. That's a bullish trend. That is a bullish trend without a doubt. And now I wonder, are we taking a little bit of a dip? And if we are, is this what I want my trade of the day to be? Do I think that we are topping here? We kind of almost quadruple topped at 50. Is this a worthwhile trade? It's not necessarily how I like trading. It's not necessarily my cup of tea. The Mag 7 is strong. The SPY did pop. It's going a little bit flat now. It is not my cup of tea. It is not my cup. Is anyone else thinking about shorting this with the concept of the downside gap fill? Is anyone else thinking about it? I'm a little hesitant. No, you sound like a bear. Where is Matt? Well, it's just because of the downside gap fill. I'm not trying to hide my reasoning or thoughts from anyone here. that is legitimately it. It's because of the downside gap fill and knowing the odds of it. This isn't just like a personal opinion. This is just the stats of the stock market. The stats of the stock market. And it's more of, because I really don't like fighting the trend. And generally when you're, inherently to gap up, the trend's up. So to play it, you have to fight the trend at a certain point, which I am not the biggest fan of. It's just not necessarily like where I feel comfortable in the market is doing these counter trend trades. But with that being said, I do also like understand the odds of the market. Like the odds are the odds. Wait for a lower high. That's what I'm kind of doing. If this starts to puke, you could technically argue this is a lower high, a rejection, support, turning into resistance. It's just more of how can I take advantage of it in a very minimal risk way? That's like what I'm looking for. Whether it does or doesn't work, the whole point of this is this game is survivable. Trading in itself is a marathon. So you just can't take that bad beat. So it all comes back to your risk management. So really that's what I'm looking for, and like whatever. I'll throw in a counter trend trade here and there. Like I said, it's not necessarily my cup of tea, but it's more of can I take advantage of it in a low risk manner? Which
Order
All right,
submitted.
fuck it.
Order submitted.
Let's see. Come on, Macarena. Come on, Macarena. Would it make sense to hold in leverage stock like URPO if it mimics the SPY of better gains? No, because that stuff decays. You have to look into the prospectus of how they are made. But the way that they produce the leverage causes it over time to decay. So it's better for like specific trading than anything else, than just like investing in it. If you wanted leverage, like quote unquote leverage, and just investing in the S&P 500, you'd probably be better off with like using leaps on the S&P 500 or using futures or something like that. Fuck. Well, from looking at my own trade history and my own journals, I know in my trades, things go wrong when I play that game of, nope, I'm going to give it a little bit more risk. Instead of reaching this high, I move it up to there. Then it gets close to there. Then I move it even higher. Obviously, I do not want to take this hit from 26 to 38. I don't want to take a hit. No one wants to take a hit. But I also know a 12-point hit at 2 contracts, that's 24 points. That is very easily survivable as a trader. Like I said, my issue is where I put on a trade like this, it comes up, and because I'm unwilling to take a hit, I move it up a little bit higher. Then all of a sudden it goes to the intraday high, I move it up a little higher. And then sometimes it works. Sometimes you're just a little early, late, whatever, and then the trade eventually goes in your favor. But if that happens to you 9 times and you quote unquote get lucky, it is that 10th time where I do this, I move it up here, nope, it comes up, and I keep going higher and higher. Well, it's the 10th time. It's 1 in 10 times, which those aren't even odds, but let's just say it's rare. It doesn't matter. It's the point that it's still going to happen, and then you blow out your account and the game's over. So it's just, remember, going into this, assume 50-50. I think there's a lot of people trying to predict, like even this, you might be watching this assuming I'm predicting this is the fall. No. I'm reacting to the setup where I'm like, okay, this is the first time today that we've kind of seen us taking out a recent low. Instead of chasing it to the downside, I waited for a pop. I saw a lower high. I try to get in here, but it's more of I have manageable risk to reward. Of course, I want it to go down, but wanting something to happen and like whatever, the accurate prediction of it, it's whatever. You have to be playing this game Like, for example, would you ever predict in blackjack that the next card's a king or something like that? No, good blackjack players, even the people counting cards, they're just playing the odds of the situation, and the situation's always dynamic, so you're taking it into account, but it's always risk reward. You're betting more when things are favorable, i.e. your risk is less, but your upside is more. And then when the situation's not so good, well, in blackjack, you're forced to play, but in trading, you can literally just sit on your hands. So this idea of attempting to predict, of like, this is the high or this is the low, that is silly. That is the mindset of people who do not make money trading. People who make money actively trading, it's always a game of risk and reward. It's always perpetually a game of risk and reward. You take your shot, assume it's 50-50, keep your risk low, keep your reward high, and it's a game of just doing that time and time again. That's what trading is. July 7th. Oh, people are saying 6-7. I still don't understand what that means. Knowing my luck here, it's going to get wicked out. It's going to tag me at 38 just to vomit down to 10 anyway. But hey, it is what it is. I'm playing with the math, but just because you're playing with the math doesn't mean it works. It means in the long run it should work, but on that individual trade, there's no guarantee of success or failure. That's unfortunately how stats work. That's how the math of active trading works. Any given trade could either work for you or might not work for you. But if you have a good trading system with positive expected value over the long term, it will work for you. But that doesn't mean every single data point, every single trade itself is going to work. And I think that's a big, like when I say that to you, you're going to think, yeah, no, duh, dude, duh. But I think when people get into the nitty gritty, I'm watching this awkwardly right now because it feels like it's coming for me. Is this it? Is this where it's coming to bust me? Yep.
Order
All right,
filled.
busted up. But whatever. I protected it. 400. When you're up 3, I was up 3K on Friday to give back 486. We'll just call it $500. Not a bad deal. It's not ideal. Obviously, I'm not like giddy that my counter trend trade. My mindset is more so normally take that breakout trade. Like my normal trading strategy would either be going long at 35 or 38, risking this recent low. And I probably already would have locked in one and had a runner. But the reason, and you guys have seen that, like you guys, it's to no one's surprise that I am a trend following trader. That's how most of my systems are. That's where I've done most of my research. But the one piece of research I've done that is not trend following is the downside gap fill. And that's exactly what I was just attempting to play. So I saw the S&P 500 ran up to this key level. I was hoping that I could get in a trade to take that rejection and maybe ride it all the way down to this downside gap fill at 6678. So coming back to that game of risk to reward, that's the risk to reward. I was risking little to potentially make a lot, and it just didn't happen on that single one. So obviously, if you apply that mantra time and time again with good risk management, well, that's where you can end up making obviously a lot of money. You're just hoping to not suffer death by 1,000 paper cuts. Death by 1,000 paper cuts. But a lot of time left in today. We still are just trending higher and higher. We just have these. We almost broke down on the SPY for a second there. How can I make this look nicer? Okay, that's a better looking one. Just waiting. You have to be patient. I waited for a little bit of a pop, didn't chase it. That is A-okay. A-okay. Oh, the question is, if we get, double topped here, am I going to do it again or am I going to wait? Obviously, we've been having issues at 250. Rejection, 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 rejection. Is this just going to be another one? The real question is, if we get smacked here and snap 39, would I be willing to take the short again? I really don't like counter trend trading. It's just not my cup of tea, folks. It's not my cup of tea or a shot of whiskey or a glass of wine or anything in between. It's just not my vibe. I would much prefer to be the person buying this breakout bar here at 34.50. This breakout bar here at 47 and just risking these recent lows. Like that is much more of my style. Much, much, much more of my style. Jesus Christ. All right, we're watching this. All I can tell you is we're at a key level. We're either breaking out or we're getting rejected, but this is the key level to pay attention to. We could also get an idea. So what I find a little concerning about this is even though price is higher.
Order submitted. Order submitted.
Well, these ones just went long. The bot went long here.
Target filled.
Maybe the bot knows something I don't know, folks, because all the bots are up. 195, 520, 300, 300, 300. Well, I'm down 500. So the bots know something. The bots definitely know something. Wow. Well, that's kind of frustrating. Oh, sorry. The chat right here. Right here. Bots 195, 520, 288, 288, 288. So the bots just took that breakout again and crushed it again. Well, my manual trades are down. That's frustrating. That's frustrating. But what I wanted to point out to you is price has gone higher, but Delta Flow hasn't. So there's a bit of divergence. Higher price, lower options. But the S&P 500 just popped off. Oh, this is going to be so frustrating. I can't do it. I can't chase it to the upside knowing about the downside gap fill. It's just not. Mathematically, it is not the right play. Of course, maybe it does work today. Maybe it doesn't work today. I have no idea. Your guess is as good as mine. But I can tell you over the long term, it is not a smart play. We're just watching this build out. We're watching it build out. Feels like the rocket ship left without me, folks. Feels like the rocket ship left with it. Matt 1, Icarus 3. It would be Matt -1. It's worse than that. It's worse than that. It is worse than that. Damn. Remember before when I told you my trade is going long here? I'm long at 35. I'm already up 50 points per contract. It's just... Sometimes that happens, and that's frustrating. But then the worst thing is you see things like that, and you're like, okay. And then all of a sudden you want a revenge trade, and like you just get angry about it, and you start to chase it. Like that's where you get into trouble. Is even though I like that entry, and I called it out to all of you at 35, risking whatever that recent low is, and you're up now 45 points. And I've done this before myself. Is you feel like you are like kind of deserving of that money. So then all of a sudden you start to chase it, but you're now chasing it 50 points higher. You're chasing it at a point where the trend's kind of like already trended, and you don't want to like necessarily get caught up in like mean reversion or something like that. So you have to be careful, man. You have to be careful. Be very, very careful. Well, it's another higher low. Jesus. Are they going to make a run up to 25,300? Speaking of risk, I think some of my swing positions are getting their fucking faces destroyed. Oh, I was hoping to get out of some of my swing protection at that downside gap fill, but this is getting to the point where I might have to cut bait. Yeah, I'm not the biggest fan of this. Not the biggest fan of this. But what the fuck are these trading at? Can I even... I don't know if these are the right prices or not. I don't know. I'm looking at my swing account. Due to AWS outage affecting our pricing provider, portfolio prices and returns may be delayed. Prices shown on the asset pages during checkout are accurate and up to date. You can continue trading as normal. So these are accurate. Okay, interesting. So when you go to the final page, it looks like you can actually manage it. It's just like the graphics are not necessarily accurate, like when you're getting in. Fuck, that's not good. Oh, brother. Oh, brother, oh, brother, oh, brother.
Order submitted.
Now it's the point in the show where you can say, did Matt actually get tilted? And the answer is probably. I have a feeling that, oh, this is so frustrating. I'm now just doing literally the opposite of what I like to do. Well, it's going to come fucking tag me again. I'm just being stupid. I think I'm getting tilted.
Order filled.
I'm definitely getting tilted here. Fuck. I think I'm getting tilted because of the swing positions. I don't even think it's because of this day. Like, I'm like, oh, is that a top? But still, I'm trading off no confirmation whatsoever. The SPY is looking a little weak. And just like that, quote unquote, oh, it's looking. So I fired off the trade without other additional confirmation. And I think if I really had to do a breakdown of my own psychology right now, I think it's because of, I mean, I don't even know where my swing positions are at. Like, I don't know what's going on with this account. I don't know what the numbers are. What the fuck? I mean, it can't be good. Like, at all. Son of a bitch. I don't know necessarily how to handle this one. Jesus Christ. Yeah, Weeble Ruff keeping me from selling early, my guardian angel, right? I mean, it's kind of hard to do proper risk management when you can't even see like where you're at. What the fuck, dude? Whoa. Fucking AWS causing issues for like everyone. I know a lot of you are in the same boat as me. Unfortunately. I know many of you are in the exact same boat as me. Okay. The name of the game here is how to not let it spiral. I mean, I really haven't taken any singular large hits. It's just like paper cuts right now. I keep trying to get in, and it's just like small risk clipped, small risk clipped. Fucking ape. Like, do you think it's just like shit code? Do you think this is going to end up being like some dipshit intern who just like posted bad code? The game of attempting to pick the top is feeling pretty stupid. How many more hits can I still have bullets in the chamber here?
Order submitted.
But I'm not liking it. Can I make a recovery? We just hit those lows. It's going to be what it's going to be. I'm wondering if this will be support or not, or if we're touching this trend line. Dude, if this just always wicks me out in the first minute, this is why I hate fighting the trend. This is why, like, what you guys are seeing in real time is why I am a trend following trader, because life is easy. You're not just freaking out of, did I pick the right top? Did I pick the right bottom? That's very much the difficulty of being a mean reversion trader. And I think there's some ways, well, I know there's some ways where you can make it mathematically more impactful. Like you wait for like a 2 standard deviation move or something like that. So is public completely down? No. It's not updating that top graphic, but all your prices are right. You can see the prices moving. They forgot to tell Claude to make no mistakes. Yeah, I guess they should have brought that up. I guess they should have brought that one up. Apple's still looking pretty good. Here is, what else is going on? This might just be a higher low. I might just get fucking destroyed here. Maybe playing the downside gap fills not just for me. You have to have quite a few bullets in the chamber to survive it, because it's just paper cuts, paper cut. You finally catch it. It's the big return. So you have to have it in a way where you're like really not risking much per attempt, because it could definitely take multiple attempts. I really thought coming up to those key levels, I thought with some of the weird disconnect here, price went higher, but delta's lower. But then it ripped anyway. We'll find out. Or do I just want to call it? Maybe it's just not my day. Just like the concept of like live to fight another day, you know? Oh. SPY's pushing a little bit there. That was a mismark on my side. I thought we were finally getting to the point of like, all right, it's a little much here, especially with the divergence between price and flow. But I mean, look at every single time it looks like it's about to actually dip. Boop. Delta just ripped. Oh yeah. Calls are being bought. Puts are being sold. The delta's just popping like no other. I feel like I'm just in the middle, or I'm standing in front of a freight train right now. Feels like I'm in the middle of a freight train, the middle of the tracks. You know, I was trying to fade the 20 move. Maybe I should have been a bit more patient to 40. Maybe. So right now it's risk management. How can I minimize? Where do I want to actually throw in the towel? Right now my risk is at the intraday high. Could I shave 7 points off? I'm trying to just lower my risk. That's like exclusively my goal is take risk off the table. That's perpetually my goal doing this shit. Don't worry, the gap will fill violently right after you end stream. Definitely could. Knowing my luck, it'll probably knock me out, and then right after that, violently fill it. So the thing that I'm playing for this entire time will probably happen, but I probably won't be able to benefit off of it. Knowing my luck. What time is it? It's almost 10:40. SPX is looking strong. NQ is going flat. So consolidation. I wouldn't say bullish or bearish. It was bullish, and now I guess you could argue maybe it's forming a bull flag, but let's kind of wait and see these extremes. I'm just trying to think, is there a way? I feel like it's just going to wick me out. I keep standing. Yep, here it comes.
Order filled.
Tag me again on that. Like I said, I was risking this high right here at 1032. Trying to play this breakdown looking good. And this is that reminder of why I fucking hate fading trend. I mean, the amount of times that I'm telling you guys in here, Just what is the trend? Identify the trend. 5 minute, 10 minute, 30 minute, 4 hour. 5 minute, 10 minute, 30 minute, 4 hour. I guess this gap fill is just not for me. Or if it is, it's just like, it's really hard to pick that point that you actually go for it. And at this point that we're ripping, I am now seeing quite a bit between 30 and 40. So maybe that's like the legitimate like turn zone. That's totally possible right here, running into some serious resistance. But I just hate going against trend. It's just not what mean reversion trading sucks. I think it does. But I think it's also per personality. There are many people who like that's what they do. They just have a set of rules that are apparently better than what we've already seen today of when to get in. You can make money being a trend following trader. You can make money being a mean reverting trader. Both are possible. I think both take certain personalities, and I think both take maybe a certain like mental framework of what the market is. And for me, just on a personal note, like the way I view the market, and on top of that, almost not all, I've definitely done research into mean reversion. Like I have some strategies that do it. But most of my stuff is all trend following just because it makes more sense to me. It definitely just all makes more sense to me. Like, yeah, okay. Like I know, especially coming to the overall market, that it's generically trend following. So cool. I'm just going to assume even if I'm off. See, I think that like to drive from the math standpoint of why there's a difference, the timing of a mean reversion trade is a lot less forgiving than the timing of a trend following trade. And the reason for that is, okay, if you're attempting to identify the overall trend, let's say you're off by whatever, X amount of time. There's still a very decent chance, especially when you're talking about the overall market, that the trend persists. So even if you're off by a minute, 3 minutes, 5 minutes, 10 minutes, maybe you're off by a bar, whatever, the trend most likely will persist. Not all the time, but most likely. While with mean reverting, your timing has to be impeccable because you're literally picking that point. You're like, no, this is where we are turning. So in the game of timing, you have to be much better at timing with mean reversion than you do trend following. Hence why I'm saying that trend following is a bit more forgiving. However, what's weird about mean reversion trading from just once, I'm telling you, it's going to knock me out. And then that's going to be the point that's like, actually, now we're going to go puke for this downside gap fill. What's interesting about the odds of mean reversion is generally you are going for a smaller profit target. So you have a higher hit rate because you're just like, nope, we're overextended, whatever, R size blown out, MACD's like whatever. You're using a basic like, hey, this is like a little too extreme type of a deal. So you're following that, and then you just wait for the over, like either way too high or way too low. You go for a quick scalp trade, you get in, you get out, you move on with your life. And that's mean reversion. And because of it, you're just going to have higher hit rates. While with trend following, to catch a big trend, well, big trends don't happen all the time. So inherently you're right a lot less, but when you are right, you're right bigger. So once again, that kind of all comes back to like, what's right for you and your opinion and your approach to the market. I am not saying one is better than the other. Both are profitable. Both can be made to be profitable. Obviously, both can also be losers. That's totally possible as well. This outage is brutal. I don't even know how to manage what the fuck's going on in my accounts. I'm pretty sure I'm down a lot of money right now in my swing accounts, and I'm like kind of bricked. Like this is fucking infuriating. This is actually beyond crazy what's going on. And just if you're tuning in right now and like maybe you're having issues getting connected, this, that, the other thing, just so you know, this is all from AWS, Amazon Web Services. It's the cloud provider for a lot of these companies apparently. And when AWS is down, this is what happens. Would be nice to see my P&L graph on such an interesting trading day. Well, I'm pretty sure mine is going to be brutally fucking red right now. I'm pretty sure. Wow. All right. Well, you have this right here. This giant node is at 40. But this is the positive gamma. You could see this purple right here. This is kind of quote unquote where we have stability. So it could get crazy to the upside. It could also get crazy to the downside. This is nuts. This is why I fucking hate trend following trading or mean reverting trading. All the bots are up. All the bots I have on today are trend following, and it's all just worked. And I get it. That's not, from a math standpoint, the best argument because we don't have that much of a sample size. There could have been other days, other examples where we just puked and things get crazy, and it would have worked to be playing the downside gap fill right out of the gate. So, like, mathematically, I'm not the biggest fan of fucking crying in the casino for this particular reason. But that doesn't take away from the moment of living it right now where you're like, dude, you're just getting beaten up. I'm waiting for all these overextensions, trying to play it, and it's just not happening. There's been no mean reversion in this. This is just a crazy strong trend, which generally I'm just riding. Generally, I'm the person who's in at 1020. I'm in at 945. I'm riding this all the way up, and I was just trying to be mindful of that downside gap fill because one day, a counter example would be one day last week, I went long when it was looking strong. We didn't have the downside gap fill, and then I ended up paying the price later. So I was trying to, I don't know, fix quote unquote that bad habit, and this is where it got me. So I'm trying to not get tilted here. I still have bullets left in the chamber, but now knowing my luck, the time I'm like, yeah, I might do it, and then I decide not to, is gonna be the time it actually pukes and I can make it all the way back. Fuck. Crazy. All-time high is 6765. 30 points away on SPX, and we still have this downside gap fill. This is just so brutal. So brutal to handle right now from a swing position, from an active trading position with the data being out. Oh, not the most ideal way to start the week, that's for fucking sure. Just frozen. Frozen. Mag 7, bottom left, top right. We are getting up here, 6740. We still have a little bit to go, I suppose. But we're kind of seeing that reflexive action, 6740. Huge play. You have this giant call credit spread. It's not the biggest. It's 10,000. Even in the last week, we've seen some crazier plays, but I just want to call this out that there's 9.8 thousand call credit spread structured at 6740, spread by 6745. So clearly pay attention to this. Clearly. Another manic Monday. Internet provider outage. It's a cloud service provider. That's why everyone's... Well, it's not an internet provider outage. It's the cloud's down. AWS is down. I don't know if it's down in its entirety or if there's just certain aspects of it. But what's happening right now in the world of the internet of why stuff is down, including many brokerages, apparently Fortnite, apparently checkout systems for airlines, the things that are down, it's because they're all hosted on AWS, on Amazon Web Services, on Amazon's cloud. Anyone got any tinfoil hat theories on why AWS went down today? I was attempting to figure out why and see what the reasoning was, and nothing came up. All we saw was at 6:30 a.m. ET, commentary from the spokesperson for Amazon said that all the issues are resolved, and clearly not. Clearly fucking not, dude. Dude, this is so frustrating, just being fucking handicapped like this. Bezos discovered his wife is sleeping with Leonardo DiCaprio. Maybe. We've heard crazier things. Now they're saying it's a cyber attack. I'm not seeing that. I'm not seeing it. Claims of Russia, China DDoS attack disrupting AWS. So there's claims of it. No cyber attack evidence. People are just saying it, but I'm not seeing any actual report suggesting a cyber attack. That doesn't mean it's not true, but it's just people, I guess, maybe suggesting it. Unlikely. Current reports point to a technical glitch in AWS infrastructure, not malicious activity. Amazon has acknowledged the issue and is restoring services with no evidence from monitoring or statements indicating a cyber attack. Widespread dependencies on AWS amplify such failures, but that's engineering fragility, not sabotage. Stay tuned for the official update. Is it possible? Yeah, of course it's possible, but I'm not seeing any official reports that are claiming that. They would know if it was DDoS. Yeah, they would know for sure. They would know without a doubt. But I'm sure we'll get some clarity. This is fucking costing me so much money. This is costing me such an egregious amount of money. It's so fucking painful. All right. Well, the next potential level of resist. Look at that flow. It's just ripping. Insane. Yeah. All right. We're coming up to a big gamma node here at 6,740. Let's see how that plays out. Another theory might be due to crypto mining, the new data centers sucking up energy. Why would that take out AWS? That doesn't make sense. AWS is down. It's ridiculous. Your advice is making you money right now, but you're losing money. I don't understand. It's really not that hard, Nathan, to understand what's going on. It seems like the rest of chat fully understands what's going on. But hey, I don't know. Maybe someone in chat will be nice to you and explain it to you. Maybe one of them will explain it to you. I keep hearing 670. You and me both. I'm at the point of just watching this of 40. Seeing how this reacts, this giant call credit spread, 10,000 contracts. If it breaks and goes, you could be talking about 6,785, which would be a new all-time high. Stocks up with the outage. Yeah, apparently the market is thinking that this is a short-term non-issue. Short-term non-issue. Clearly the market is not pricing in any issues. What happens when all the delayed trades hit the market? They're not delayed trades. The pricing is still right. I read that out before. So certain things like your equity curve of the day are going to be messed up. That's a different service. But the actual pricing mechanism, that is something that is like critical to the market, that's going to be accurate. So you're going to see right prices, but you're like the graphics are not going to be right, like your equity curve graphics and whatnot. But you can see like the real legit prices right now. But to know how much you're up or down, you'd have to do the math yourself. Thoughts on the AI bubble? That has nothing to do with active trading. That has to more so, that's a question specific to like, would you want to invest in AI at this moment in time if you think it's a bubble, which is wildly different than active trading, whether swing trading or scalp trading. Fuck, dude. This is just nuts. All right, we're kind of close. We hit 3.6 and some change. Couple more points to go. The SPY delta is still strong. The Mag 7 delta is still strong. 0.34% to go for the SPY, all-time high. Yeah, we are pretty much right there. It is 6.4. We hit it on Thursday the 9th. I cannot believe this. This is so fucking wild to me. Wow. All dips are apparently to be bought. The overall news, I mean, kind of sidestepping this AWS internet outage issue. The market is loving the 1, 2, 3 combo punch of what's happening in China, and it seems like they're going to be talking, and they're really walking that back. We had a spokesperson for the White House today saying that they think the shutdown is going to be resolved sooner rather than later. The market's loving that. It's loving the initial bout of earnings. Apparently, we're playing seasonality. Like, I get fully that the internet stuff seems bad, and like the question is, like, what's going on? But clearly the market is pricing in other things than the internet being temporarily out. AWS vibe coding gone wild. It feels like it. Fuck. All right. Well, at this point, we might as well mark out the current intraday high, except every single time I mark out the intraday high, we just take it out like minutes later. Oh, fuck. How much pain can I take? I don't even know necessarily why I'd be looking for a short at this moment. It's just fighting trend. It's no different than the other times I was fighting trend. The only thing that's coming to mind is like trying to fade this level, which we technically haven't hit yet. This 40 level. Look at that just go. Wow. They are buying calls like no other. Like no fucking other. That's crazy. 'Tis crazy. Up, up, and away, Batman. That's yesterday's coding broke the internet. Maybe. That's how bad it was. My data research yesterday was so bad it just broke the overall internet. I keep getting sucked back into looking at this, thinking, is this the time to fade it? And then every time I've tried to fade it, I'm just getting steamrolled. Absolutely steamrolled. Oh, brother. they front running it a little bit here? Oh, I don't even know if I should make this my last attempt or should I just like wait for something worse to happen? Because like this looks interesting right now, but how does it look any different than what we saw before? Where we're like, okay, it's looking good, and then it like, oh, the Mag 7. I can only do like I could only survive this if I have to take on the most minimal risk possible. Assuming the reaction is whatever 50-50, that's fine. Like I have no issue with that. It's just to survive it, you have to just take on minimal risk. You have to take on minimal risk. Are you trying to convince yourself into a trade? I'm actually trying to talk myself out of it because looking at it right now, I just want to smash the sell button again because I'm tilted and I just like want it to work. And I guess part of my reasoning is, oh, we're starting to see a little bit of weakness. Maybe we're getting rejected at this 40 level, shoulder, head, shoulder. Like I'm actually trying to talk myself out of trading right now because every ounce of my being, my like tilted revenge trading wants to just like smash this short. So I'm trying to like out loud be like, no, like don't like, what's your risk? What's your risk? I'm trying to remind myself of like actual good trading things rather than just smashing it. Oh, fuck. And this is why I remind myself because of this, like right there, on this 1 minute, oh, lower high, let's smash it, and I'd already be underwater. Right there. I wasn't going to do this one, but at 11, the turn of the hour, I was like, all right, can I get away with this risk? Like, it's just all a game of like, can you just take on the smallest fucking risk possible? That's the game. Follow the system, dude. I'm not even trading a system today. Today I'm attempting to take advantage of the downside gap. All the systems I have in production right now are trend following systems. I have some in the back end that I just tinker with for mean reversion. I could even see where they would be at right now. Probably nowhere close. Technically, one did fire around 9:45 this morning, and it got blown out for mean reversion. But it only fired that one time. It only fired that one time. Fuck. What is this? 7. What is this high? 10 points. It's just, I keep like digging my grave here. I just keep fucking digging my grave time and time again. Look at that Mag 7 flow. That's crazy. Wow. Holy crap, Batman. What are we? Holy crap. Oh, why? What did I do with the chat? Nope, that's not right. There we go. Uncanny. Beyond short squeeze, the market's up 1%. I'm not calling this a short squeeze by any means. Not calling this a short squeeze by any means. Tesla popping again, trading at 444. 450 is the big breakout where it's had like issues in the past. Damn, this trend. Wow. We're right at 25,300. Do we think it's going to hold? What a pump, dude. What a pump we have gotten today. Look at this. Every single time we pump, all right. Oh, lower high looks like it's going to go. Nope. Oh, lower high looks like it's going to go. Just buyers are stepping in at every second. Right here. Golly. Gall fucking Lee. Oh, how do I want to think about this? How do I want to do it? Part of my mind, and I guess I'm just like thinking out loud right now, is, oh, okay, is it just worthwhile to switch? But knowing my luck, if I switch right now to going bullish, that will be the top and we will die right after. So I'm hesitant about saying, because even this, I like it. It's a higher low. You go long here, you're risking this recent low, you're scaling out at the intraday high, and then you have a runner. Like it's just bada bing, bada boom. And I would almost be out, and I'd be setting that stop to break even. 15 out of 22. You lock in those 7 points. It's $140. Great. Then you have the stop to break even, and you ride it. And if it goes, it goes. But you're playing the higher highs, higher lows. And this normally would be like, I mean, you guys have seen my shows. That's how I do it. Like, that's 100% what I do. That's my approach to the market. And for some fucking reason today, just because of how often we're seeing the downside gap fill, I wanted to play it today. I thought I'd spice things up, which was a pretty stupid decision, apparently. I picked the wrong day to do it. Picked the wrong day to do it. Look at this trend. All right. I guess the two things at this point to pay attention to are this key gamma level all the way up here, 6740. 6740 right here, 6740. And then also maybe watch the upward sloping trend lines to see if that holds. But right here is just higher highs, higher lows, like undeniable. Undeniable. Wow. SPY is losing a little bit of its steam, but the Mag 7 does not give a shit. Look at that. Fuck, man. Crazy. Crazy, crazy, crazy. SPY's showing a little bit more weakness than the NASDAQ right here. Looking a little bit like it got hit right at 11. I assume maybe a little bit of profit taking. And now it's pushing the bottom end of that bound while the Qs are actually kind of closer to that top. I think had that trade that you guys said, hey, like, don't be stupid here, I think that one would have got busted already. It would have tapped it just to maybe potentially come down. Do you nuke your trading account? No, thankfully, I kept my risk right where I thought it was, just in case this scenario where it just runs away. I would have lost the accounts, but right now, I gave back about half the profit from Friday, and they're still alive. I have a fighting chance now. I have a fighting chance. It's just obviously I can't be as loosey-goosey with it. I have to really, really be confident, or not even really confident. Just assume it's 50-50. I have to go for low risk opportunities here. But we are seemingly stalling out. We got this big push to right before 11. 11 hit, a little bit of a breather, and now we're just going sideways ever since the turn of the hour. Please, please, please keep in mind the downside gap fill. Please keep in mind. I know today is strong, but that does not mean we are out of the weeds for a downside gap fill. Like, I get it. I get that a lot of people have recency bias and you see it go up and you're like, oh, I got to be bullish. We're going up. But that's not true. That's just not how the market necessarily works. That's not necessarily how the market works as easily. Like, in terms of risk reward, bullish, bearish, we're actually closer to major resistance to the bullish side than we are the opportunity to play this downside gap fill all the way down to 6679, 6678. Fuck. SPY's getting a little hit right there. Maybe it wants to dip to 25, another 5 points. Maybe it finds support there. The NASDAQ is still going, though. That MAG 7. SPY's starting at 11. We're seeing a little change of trend. Clearly bullish throughout the day, but over the past 12-ish minutes, a little bit. Why is the gap fill? Because it's an area of untested supply and demand, and traders like to test it. Damn. Which way is this going to go? I was really thinking about taking this breakdown at 11:05. I'm happy I didn't, because I would have been wicked out at 11:11. I would have gotten in and I would have been under pressure the entire time. By 11:06, 1 minute into it, I would have been under pressure. And then by 11:11, I would have been popped out, even though the SPY is showing a bit of weakness here. So good thing I didn't do that, because I would just be continually using up my bullets for no reason. Obviously, in hindsight, the 11-12 breakdown would have been nice, but coulda, shoulda, woulda. If I just showed you that, you would have never known the next bar was going down. You'd be like, yeah, no, we just hit an intraday high. Why are you fading it? And it just so happened that then we're taking the hit. But you would never know that just looking at this. You never know it. Okay, how is this actually going to break? Dude, I would have been so pissed had I taken that, because I would have been wicked out just for me to then be in profit. Dude, I would be fucking irate right now if this exact trade happened. I didn't take the trade, but I was really thinking at 11:05. Would have been wicked out at 11:11 just for it then to vomit right into my face. Dude, I would be losing my mind right now had I done that. Oh, I'd be so pissed. I'd be so fucking irate. But hey, sometimes that's trading. Sometimes that is trading. I'm wondering. All right, there are people trying to buy at 80. That's 15 points. We fell at 300. Mag 7 tilting a little. SPY tilting a little. Oh, do I make this my risk? Do I make it? Do I want to get in? Do I think it gets faded now? Any thoughts from people who are better than me on this? Do you think this is the moment to strike, or do you think this is just another dip to be bought? It's a little bit more of a turn to the downside than we've seen most of the day, but this is what I was thinking about. Even right there at 11.13, 11.14, I was super close to chasing because we almost broke. Well, we did break the low. We did break the low. We did break the low. Oh, brother. And this is exactly why I didn't chase it, just because had I chased it, my risk would be all the way up here, which is too far, and my accounts would probably be blown at that point. So I'm happy that I'm showing a little bit more restraint. But if we start to fall here, the question is, whatever high we're potentially putting in right now, let's say this starts to fall back over, can I use this bounce as high as my risk right here? So we had higher highs, higher lows. We hit an intraday high at 11.11. We puke a little. We take out the low. We take out the low. We take out the low. Then right here, this feels like it's going to be kind of decisive of, do we bounce up enough? I didn't want to use that, but if we start to fail here, can I risk this high? Oh, brother. Am I okay with risking that high? It is still against trend. 5 minute, 10 minute, 30 minute is all bullish. 5 minute, 10 minute, 30 minute, 40 minute, or 4 hours, all bullish. All the trends are still bullish for sure. But trends change. And you know what they say? The 19th try is the lucky charm, right? The 19th attempt, we're right at that trend line. Mag 7 tilted a little. SPY did tilt, gone flat. Is it just a higher low? Are they just wicking people out again? Dude, that's fucking brutal. Are they just, they might have just wicked people out right there. Take out those lows and then pop it right back up. The amount of times that I've played this long is actually exactly why I didn't chase it to the short side, because that's like, I've played this long way too many times of like, oh, nope, they're going to sweep these lows, take out the low, take out the low, take out the low. Lots of people using those lows. It's also a psychological level of 300. Use that as your support to keep going. Stomp those people out and rip it back anyway. I've gone long way too many times at 11.16 to be chasing that down at 11.14, 11.15. Like I've been the person on that other side of the trade way too many times. Way too many fucking times. Wow. Brutal. Well, the way things are shaping up, the trade of the day was going long at 10 a.m. or at 10:20. That's pretty much how things are shaping up. Gold's ripping. Yeah, I believe it's a new all-time high. Gold is showing a lot of strength. Oh, I feel like I'm kind of handicapped for two reasons. Number one, I don't really want to do anything without that gap getting filled. I think that's very, very important to note. The downside gap fill on the SPY, the Qs, SPX, NDX, even the Russell. And then putting that together with this like weird tech outage, it's just adding a lot of fucking complexity to the decisions that need to be made today. Dude, this is now the second time I'm happy I didn't take that trade, because I was really thinking about going short here at 11.05, would have wicked me out. Then I would have been pissed. Then I was thinking about taking that breakdown trade, and I said, nope, at 11.14. You've been the person who goes long right after too many times. You know that sometimes they just wick these people out, and that's exactly what happened. So I feel like, unfortunately, I fell into the landmine a couple times today, but literally in real time discussing this stuff with you guys. I feel like the last two, I've just completely misstepped what would have been disaster. Both of those to get together, I would probably have like one bullet left, most likely, in these trades. So super, like, I mean, granted, I'm not happy we didn't mean revert earlier the way I thought we would, but really happy I didn't fall for their additional tricks. Liquidity grab. I don't even think people understand what they're saying when they're saying liquidity grab. It's just literally it's just sitting orders, and then those orders get filled, which I guess, yeah, a really fancy way to say that is liquidity grab. You're not like wrong, but the mantra and the mindset of calling something a liquidity grab is literally just like from the era of trying to make something that's not that complicated sound very, very complicated. Like it's just trades. It's just where people have orders. It's just where people have orders. That's all. All right. Well, the SPY obviously traded down into its trend lines for the day. Thus far, it's holding easily could just be a higher low. The Qs didn't really touch it and bounced right back up to the intraday high. The tech sector has been crazy strong. Crazy strong. All right. I'll wait for the wrap up of this bar here. We'll see what's going on. But we might need to call it because it doesn't look like anything's happening right now. Doesn't look like, well, it's crazy in its own right, but not the type of crazy that we really enjoy the most. Textbook liquidity sweep. Yeah, I mean, if that's what you want to call it. I feel like we're in this new age where every generation of traders, they just regurgitate what the last generation said, like some teacher, quote unquote, like furu guru. They just take all the same terms and call it something different and then remarket it as something new when there's nothing new under the sun. This is all the same shit all the time, no different. And I don't know, there's nothing necessarily inherently wrong with it, but I don't like this perception that something new has been made. It's not new. It's a new name, but the concept of it is something that has probably been written about for decades and studied for decades. It's just now with social media and, I don't know, new forms of marketing and reach to people, they like to doll it up as if it's like completely new. Reworded shit, yeah. Like, and whatever, that doesn't mean the concept in itself is bad. Like, it's called support. It's called resistance. If you want to call it something else, it's just, I think my issue is the newest generation of this marketing bullshit. It's almost like seemingly intentionally verbose to make you feel like you're stupid and not understanding something. While previous iterations, maybe they called it something new, but it was still in a certain sense like simplified. It was just a different simplistic term and explanation. The newest iteration of retail education, it's seemingly just hours of streaming and word vomit and like a gazillion different dictionary textbook terms that you have to know, and they're made up, but sometimes they invalidate each other. It's just, I think the current iteration is like intentionally verbose for no reason. Well, I think the reason is actually very intentional, and it's smart as the teachers, because if you wrap something up in complexity, when something goes wrong, you just blame the user on not understanding the complexity, when in reality, sometimes trading, it's a 50-50 game. You don't like always know. You can't always predict it. However, if you're using it, and if you were to boil down all of the statements from teaching and it's dog shit, well, if it's complex, you can kind of like sidestep it being referred to as dog shit, and you can be like, no, you just don't understand it. It's actually awesome. So like, that's my issue with it. Like you said, Matt, earlier, these applications need backup cloud services because it's ridiculous. I fully agree. You're not going to find me disagreeing with that at all. At all. Oh, we're getting to that point in the day where not much is going on. Jesus. It's just, yep, this was a little dip. Not the worst idea. I guess that was an attempt at a long. The NASDAQ is insanely strong. Wow. So as a theoretical scientist, yeah, it's all theoretical science. All right, here's a look at flow. Obviously, the movement in price has really calmed down, and that's because right here. So Mag 7 has gone flat after a big push. Price just hit a new intraday high. S&P 500 is actually now tilting to the upside right here after pop, a little bit of a dip, higher low, target. I mean, I'm telling you the main target level is 6740, and you can still see it here. That's the major gamma influence. It's 6740. So that's what there is. I would be paying attention to. Obviously, do what you want. Do what you want. But, geez, this is a runaway train. Runaway train. Runaway train. My Merrill Lynch app is working fine, to be honest. Well, there's probably bigger ones that... Well, first of all, even with the smaller ones, the prices are still going to be right. That's a different data source. But in terms of some of the other, I guess, visual things that are shown, that logic probably lives on AWS for most. But I think there should be fallovers elsewhere. In my last job at this point, almost a decade ago, we had to do that all the time because I worked in the banking world. And in the world of banking, people can't be without their money. Well, a little profit taking here as we push higher. A little profit taking here. All right, I guess I'm just marking out the recent highs and lows. We're going to see how this goes. Do you think it's time to short gold? God, no. Why would you just short it because it's arbitrarily high? Just because something's up doesn't mean it's a good reason to short. Things can keep going up. The markets can stay a lot more illogical than you can stay liquid. Just because something is high does not mean, oh, I got a short. Just because something is low doesn't mean you should buy it. You have to have other aspects to your trading thesis. And really, once again, the game always comes down to risk to reward. Trump lunchtime talk with Australian PM. Put another shrimp on the barbie. Put another shrimp on the barbie. Maybe. But all right, things are slowing down. Looks like the craziness has calmed down. All I can tell you is be careful of 6740, and the overshoot of that would be 6750. The 6740 level is a huge call credit spread. That is the sold leg, and then the purchase leg is 6745. I do also want to remind you that there is a large downside gap fill to the high from yesterday at 6679. And by yesterday, excuse me, I meant Friday. I know that this seems crazy, but it is not that insane statistically that we end up getting that downside gap fill. So please be careful of chasing it at these highs. And if you choose to do so, obviously just set your risk. If it goes a little in your favor, set it to break even. So if it tilts, you're not the person holding the bag all the way down. But right now, I have key upside levels I'm watching. I have key downside levels I'm watching. And we're just going to see how this plays out. That's what I have for you. Good luck with all these internet outages. It's a huge pain in the ass, so hopefully it's not impacting you. It is most likely destroying my swing account right now because I can't really see what's going on. And I have a feeling my pending orders for protection aren't working. So I'm going to have to go dive into that and I guess start praying because I don't know if my risk management is even existent right now. Before I let you go, shout out to Public. If you guys aren't on Public already, check it out. It is the best brokerage to be trading on because it's the only one that gives you rebates when you're trading options. So if you're an options trader, aspiring options trader, check it out. Pinned to the top of chat in the description. Use that link because you're going to start out at a higher rebate tier. That's what I have for you. I will be posting an update video later on today, and then we'll be streaming once again tomorrow morning. Catch you later. Peace.